Hey guys, and welcome to the Working Money Channel. WTAF Elon Musk, did you tweet or what? This coming from Ian Northing here on Twitter. Dogecoin down to 9 cents. Take a look at this chart, just a straight red line down. We got Stephen Bulldieppe here saying WTF is wrong with XRP or with the Yahoo app. We'll take a look at this, guys. I'm going to CoinMarketCap here, and there is a lot of red on the board, despite the fact that the crypto market is not faring too poorly. We've got the market cap up here, $500 billion, and Bitcoin dominance at 145.6%. So clearly something is wrong here, and yeah, it has been confirmed that there is a glitch right now for CoinMarketCap. And what's with the Yahoo app? Well, I'm not sure about the app, but when I go to the Yahoo Finance page here, you can see it is also run by CoinMarketCap. So it looks as though they are streaming their data from an outdated source. The same thing happened a few weeks ago, if you guys remember, when the XRP market cap was not listed correctly on CoinMarketCap, and then they corrected that. So the market cap right now for XRP on CoinMarketCap is correct. However, there's a lot of other information here that is just not streaming the correct feed. So right now, according to CoinMarketCap, market cap is at $500 billion. And Bitcoin dominance at 145.6%. So what is it, 2018? Don't put me in a time machine and bring me back there. Please do not. So let's go to live coin watch here. Bitcoin right now trading at about $39,300. Ethereum trading just shy of $2,500. We got Binance coin up to $358. XRP right now trading at 88 cents. And you know, despite these kinds of discrepancies, we are still seeing the correct values listed on CoinMarketCap. So what's going on in the crypto space? We did see some bullish momentum for Bitcoin over the last day or so. $39,000, reaching back up to that $40,000 level. Look at this. This is Bitcoin on the hourly. You can see a lot of bullish momentum over the last day. Bitcoin did peak at about 39,800 before coming back down. And as I'd mentioned, we are now trading at around 39,300 for Bitcoin. So let me just zoom out here. Actually, I'm going to throw it on I'll put it back on the daily here. And I'll zoom back in, bring up a Fibonacci retracement tool. So we are coming back up. We are now above the 0.236 level for Bitcoin. Bitcoin did find that support down in here. And, you know, despite Ian Northing's joke from earlier, we did in fact get an Elon tweet, something a little more positive. But Cointelegraph was apparently reporting this incorrectly. Elon Musk is catching flack again. But what's it for this time? Signia CEO Magda Wertzka lambasted him, saying, "What we have seen with Bitcoin is price manipulation by one very powerful and influential individual." Well, you know what? Elon Musk responded to Cointelegraph's tweet thread here, saying this is inaccurate. Tesla only sold about 10% of holdings to confirm BTC could be liquidated easily without moving the market. When there's confirmation of reasonable, roughly 50% clean energy usage by miners with positive future trend, Tesla will resume allowing Bitcoin transactions. And Mr. Whale here on Twitter chiming in, reasonable approach. Unfortunately, 50% clean energy for BTC mining likely won't be here for another 5 to 10 years. The Bitcoin maxi cult works by hating on all critical thinkers and spreading misinformation. I could not agree more. Notice how they all argue Elon is manipulating Bitcoin only when prices are red, not when they are green. I thought Bitcoin was decentralized and couldn't be manipulated by anyone, with a laughing face emoji. So, Elon Musk setting the record straight. Here is an article from Yahoo Finance as to what happened. Bitcoin jumps after Musk says Tesla will use Bitcoin when mining is cleaner. So Elon Musk said Tesla would allow transactions in Bitcoin once mining is done with more clean energy. As I just mentioned from that tweet, the executive said in a tweet that he wants miners to use about 50% clean energy. The Cambridge Center for Alternative Finance has estimated that 39% of crypto mining is powered by renewable sources, mainly hydroelectric. It shows that Musk still sees a future for wider Bitcoin adoption after he criticized the digital currency for being an energy hog and relying too much on fossil fuels. Bitcoin jumped 9% on Sunday, which was yesterday, trading at $39,580, near a 2-week high as of 8 a.m. in London on Monday. Here's a quote. Elon's stance seems to be moderating and providing a target that's not far away. This coming from Jonathan Kleesman, head of over-the-counter and institutional sales at crypto derivatives exchange FTX. The rally was already underway as the market speculates about an imminent purchase from MicroStrategy, and the G7 comments on crypto were neutral, even optimistic about digital innovation. So MicroStrategy, whose chief executive officer Michael Saylor has become a vocal Bitcoin evangelist last week, boosted a junk bond offering for the purposes of buying the cryptocurrency to $500 million from $400 million. So we are seeing some positive news coming out for cryptocurrency. Elon Musk, not so much going back on what he said, but kind of adding to his thought process, I suppose, making it more clear how he sees Tesla's future regarding Bitcoin and Bitcoin transactions. So it's great because we are getting this boost in the market, and it has affected XRP price just by a little bit, not by much. XRP trading right now at about 87 cents. We're still in this sideways pattern. There's still quite a ways to go to get up above these Fibonacci retracement levels and finally break past the 0.702, making new all-time highs. Of course, XRP, my thought process is this: XRP will see this price appreciation once the overall altcoin rally commences. And so the story starts with Bitcoin. We got to see Bitcoin move. We got to see Bitcoin hit that new all-time high. We need to see that knockback. We need to see retail trader sentiment get a little scared, take their money out of Bitcoin, start pumping their money into altcoins. And this is when we're going to see that real money flow in to XRP, bringing XRP up to those target prices that we keep talking about, $10 to $14, give or take. You guys can see down here on the chart, sentiment not too excited right now. Even if I just circle that, you guys can see very low volume for trading XRP right now. Again, this is on the daily, so low daily volume, not seeing much action, but the boost in Bitcoin price, certainly a good start. XRP crypto, well, pointing out the obvious, this whole time Elon Musk needed to tweet something bullish in order for most people to finally see we're still in a bull market. Yeah, pretty much. I'm going to keep moving on though, guys, with Ripple and XRP customer news. Ripple customer SocGen and Ripple connected Kyriba. These Ripple customers are the main topic of this article. So apparently these two companies, SocGen and Kyriba, co-developed cloud-based treasury management system. So the Société Générale has joined forces with Kyriba to develop a new cloud-based treasury management system. The new platform will offer real-time monitoring of treasury positions and liquidity management, payment automation, improved fraud management, and multi-bank and ERP connectivity. As it is hosted in the cloud, the bank says the service will offer easier implementation and seamless updates. It will be available on SG Markets and banks' digital client portals for corporates and launched during the fourth quarter of 2021, starting with the French market. And so Alexandre Meymat, head of global transaction and payment services at Société Générale, he comments, treasury management is a key area of focus for companies, and we believe it is essential to make this easier through simple, efficient, and secure tools. This is even more important as we exit the current crisis, and depending on their size, some companies are poorly equipped in this area. So these guys are developing more cloud-based management tools in order to provide these services coming out of this latest financial crisis, and these guys both customers of Ripple. Wanted to thank T-Hole Bet at XRP for posting that. I've got another one here, guys, from Matthew Liny here. IBS recognizes Temenos as the #1 best-selling banking software in 9 categories, more than any other technology. And for those of you guys who do not know, Temenos is Ripple enabled. So any bank that is connected to Temenos can indeed leverage XRP if they choose. And, certainly they will eventually. Maybe not right this second, but they are Ripple enabled. So IBS recognizes Temenos as the #1 best-selling banking software in 9 categories. And here are some bullet points. Temenos' cloud-native AI-powered technology was recognized for leadership in 9 categories, up from 6 last year. #1 core banking system for 16 consecutive years, more than 2x the number of deals of the second-placed vendor. #1 in digital banking and channels for the 5th year in a row, with 3 times more deals than the next competitor. #1 in retail payments for the 3rd year in a row, with 3 times more deals than the next competitor. #1 for neobanks and challenger banks, with 17 more deals than the next vendor. Temenos also ranked as a regional leader in the Americas, APAC, Europe and Middle East, and Africa. So really just blowing the competition out of the water. Here's just some more documentation with regards to Temenos. Blockchain technologies like the Ripple protocol enable the creation creation of lower cost systems that banks need to compete. Because these systems use a distributed ledger approach, banks can utilize real-time settlements, or RTS. This lowers the administrative and opportunity costs associated with the current correspondent banking system, and as a result, customers can be retained. So this, again, just pointing to the fact that, Temenos did indeed integrate with Ripple over 5 years ago now, and, they were already a big company, but I have a feeling that, this integration over the last several years, especially getting ahead of their competition when it comes to DLT and crypto integration, definitely has given them a leg up. I mean, you can see it right here, blown the competition just right out of the water. 16 consecutive years, more than 2 times the number of deals than the second placed vendor, so they came in number 1. In digital banking, more than 3 times the deals than the next competitor, so on and so forth. So I wanted to thank Matthew Lany for posting that. Another one from T-Hole-Betic XRP, guys, and this with regards to Ripple customer ABN Amro. ABN Amro builds payment services for gig economy workers. So what have they done? They've developed a tool that allows flexible workers to have their earnings paid out themselves quickly and easily. As the gig economy grows, there is an increasing number of flexible workers using digital platforms to find jobs on an hourly basis, but it can take weeks after completing a shift for these gig workers to receive their pay. And so ABN Amro's answer is an instant payment service that helps people decide themselves when their invoice is paid once the work is done. This is something that I think we are going to see more of, and I remember Brad Garlinghouse even mentioning this with regards to the XRP ledger and getting paid out. The fact of the matter is there's a reason why payroll happens every 2 weeks. It's because it's a very intensive process, and the accountants, the bookkeepers that are usually working at companies, they don't want to have to do it every week just because of the sheer amount of work. But what Brad Garlinghouse was mentioning, and this was a few years ago now, is that with DLT technology like the XRPL, workers can literally get paid by the hour if you want them to. I mean, you can clock in, do 3 hours of work, and get paid instantaneously. That is the benefit of using DLT technology. It's so efficient, you don't need the middleman, and so what it does is it recognizes all those little details and makes payments ultimately more efficient than they've ever been, and it looks like ABN Amro is taking that example and giving gig economy workers, which is now becoming a bigger segment of the population, give them the ability to get paid quicker. So I wanted to thank T-Hole-Betic XRP for posting that. Another one here, guys, from BondCrypt XRP. Cryptocurrency exchanges start dropping coins. So is the domino effect beginning? I mean, we keep hearing about real-world utility and, how many of these cryptocurrencies are just plain garbage and they are going to fall to the wayside. And so in Korea, this is what is happening. Cryptocurrency exchanges are now dropping coins. Local exchanges are slashing the numbers of cryptocurrencies they offer. The country's largest exchange by trading volume, Upbit, announced on Friday that 25 coins were put in an investment warning list, a first step before delisting the coins from the exchange. Smaller exchanges such as Probit announced the delisting of hundreds of coins recently as well. The move comes as the exchanges hope to partner with banks that agree to offer bank accounts in the name of the actual trader for trading on the exchanges. After an amendment to the Act reporting and using specified financial transaction information took effect in March, exchanges were given until September 24th to find such banks to keep operating. So it sounds as though in South Korea, this has been looming for a while now. Banks have been reluctant to offer so-called real name accounts for cryptocurrency trading as they don't want to be responsible for potential money laundering and crypto asset related fraud. Exchanges are abandoning lesser known underperforming coins to shake off some risks and appeal to the banks and financial regulators as safer places to do business. So we are seeing this in South Korea, a very cryptocurrency forward country, and yet these rules are slowly being put in place to really regulate this segment of the financial sector. And, this is just one example of what I think we are going to see in abundance down the road in the coming years. And I have a feeling that the SEC lawsuit with Ripple is really going to have a huge impact on this, not just in the United States, but worldwide. All right. In a lot of ways, this is very new to many governments around the world. And so, looking to the United States for that verdict on XRP, and how currencies are going to be classified is going to be really important. Which brings me to this, Stéphane Hubert posting this strategic goal number 2 of the SEC for the year of 2022, identify and take steps to address existing SEC rules and approaches that are outdated. What could that mean? Postulating that perhaps they need to revamp existing rules so that they encompass cryptocurrencies. So we noted this down here from this SEC.gov document. Interesting to say the least. Of course, we know the rules that are currently in place definitely can't hold up to the current age of financial innovation. Cryptocurrencies are here. They're not going anywhere. And with more utility comes great price appreciation. I saw this, guys, from DJ Peter Vass. Now, will Ripple's new ODL corridors impact XRP's price? The short answer is, in the short term, I do not think so. I mean, we're always hoping that XRP price is really just going to boom once we see, a new corridor open. And I think that we were all feeling this way back in, 2018, 2019. We were hoping to see real world adoption and price appreciation happen slowly. But at the end of the day, I think what's really needed is for banks to really start adopting XRP. And that's going to happen. First step, the court clearance. Once we get regulatory clarity for XRP specifically, that's going to open the doors for a lot of these institutions to feel more comfortable holding XRP. And so Ripple did just tweet out a report. I talked about it a little bit in a former video. The emergence of new payment technologies makes it possible for small and medium-sized enterprises, or SMEs, to source talent and supplies from abroad, thus expanding their services to foreign markets. That would in turn require them to make payments abroad, and that's where Ripple comes into the picture. So just talking about their game plan, and I showed this graph in a former video, basically talking about emerging market growth opportunity and how we're seeing global payment revenues rise. This is giving the numbers from 2006 all the way projected into the future. You can see by 2022, we are seeing a huge spike in international payments, and ultimately this is what's going to give the XRP ledger value. So additionally, consulting firm McKinsey has predicted that the expected revenue from this market should increase by 9% and is expected to hit the $3 million mark by 2022. Now, 2022 is only 6 months away. As already known, most of Ripple's revenue comes from the Asia Pacific and Eastern European regions, and now the blockchain firm is focused on catering to low-value cross-border flows of SMEs, which would mainly comprise of bill payments, wages, and salaries, and e-commerce. So there's a lot of focus on these low-value payments, but Ripple wants to kind of target those in high volumes. What's really going to drive the value, I think, of XRP are those large value payments. So, I mean, we could piddle a little over here and open a new corridor over there, and that's all fine and good, but we really still don't have the demand for XRP. Part of that is because of the clarity, but also part of that is because of the volume. It's just not there yet. So you can see down here another graphic from that SME white paper. The need for SMEs are greatly unmet by the traditional systems and are becoming increasingly demanding in real time. They talk a little bit down here about the corridors. Ripple's technology includes data-rich messaging between all transacting parties and uses a standardized rule set to send real-time, on-demand, low-cost, and trackable payments around the world. RippleNet also connects siloed payment systems through an open, neutral protocol, the Interledger Protocol, or ILP. As and when new institutions join hands with Ripple, their native assets price, XRP, is likely to get impacted in a positive way. At press time, the 7th largest crypto is trading at about 83 cents. So this article is also stating that once we see more banks join hands, and we are going to see this, guys. I mean, again, this is still just the beginning for real-world adoption of cryptocurrencies. We knew this journey was going to take a while. I mean, we're lucky because we can still trade XRP in a spec market and make money off these speculative moves, but really, where's that real value going to be? And this is why I'm not selling 100% of my XRP. Once the price reaches $10 to $13, I'm only going to sell a portion and keep a portion, selling it if one of two things happen. The first thing being if XRP really does just go on a tear during an altcoin season and we see the prices go upward of $50. Okay, then I will relinquish the remaining amount of my XRP. Or for the mega long term, and that would be for real world utility. I'm happy holding it. I got in at a very low price, a price that I don't think personally we will see XRP go to ever again. So this is what my strategy is. On top of that, I wanted to remind you guys, this is from Real XRP Boy here on Twitter, from Swell. I believe it was either 2018 or 2019. It's an oldie but a goodie. Let me play you guys this clip.
between the ability to use them for that and the price that they have to have. Because like a few months ago, I spoke with Miguel Villas, the head of XRP markets at Ripple. XRP is Ripple's cryptocurrency that we've been talking about. And he said, before he could even really have that conversation with banks to encourage them to use this as an on-demand liquidity tool, the market cap needed to be much higher, the transaction volume needed to be much higher, and there needed to be more exchange partners. So if it's just being used kind of for transmission like that, what does that imply about the price versus some of the kind of the retail use case or speculative use cases that
price is going to go up? No, look,
and how far away
the honest answer is I don't know. Bitcoin and Ethereum, I don't know what the driver of value is there. I think, in fact, when you look at Bitcoin, the initial adoption of Bitcoin is all about retail, and that didn't pan out. And suddenly you have millions of people who hold it. They're just going to hold it. So what's become the use case for Bitcoin is just a store of value, and I think that will persist. And somehow they landed on that, and that's maybe going to persist into the future.
I'm just going to stop it there real quick because notice how he's setting this up. The guy asked him about XRP, real world utility, the price of XRP, when are we going to see price appreciation? And this guy, I don't know who this gentleman is. If somebody does know, please do put it down in the comments section. He's clearly talking on behalf of Ripple though, but he says, Bitcoin, there's no use case there. Ethereum, there's no real use case, at least at the time that this was recorded. There was no use case at that point, and so Bitcoin just kind of landed on a store of value use case, and so that's working for Bitcoin hodlers. But now listen to what he has to say.
But XRP, it's really about this very fundamental driver of demand. Yeah, I mean, if XRP is going to be inserted deeply into the financial system, the market cap has to be orders of magnitude bigger. It has to be able to support institutional flows in the orders of magnitude of trillions of dollars. Today it's a lot smaller. I think it's right around $30 billion. But when you look at
the market cap, I thought, are you talking about the transaction volume?
The market cap of so there's 100 billion XRP, and the market cap is trading around 30 cents, so it's about $30 billion. Okay. So yeah, I mean, I think that the current users and sort of the crawl, walk, run of growing the capital market, if you will, around XRP is going to be about fundamental demand, and that comes from companies like Veeam, and as more companies like Veeam start to use XRP and use digital currencies in their funding flows, they're going to be putting a massive amount of pressure on banks and larger financial institutions to start using this as well, or they're going to be toast. They're not going to be able to compete and be as nimble as a company like Veeam, who doesn't have to operate with any treasury overhead and all the cost complications.
All the cost complications that go along with that. So you're hearing what he's saying. Price will appreciate once we see that demand. Something that I've been saying on this channel for a very long time. I'm glad we're getting it from a Ripple employee talking about this at Swell of 2018. Again, I did not see this clip, or maybe I did and I just forgot about it, but I think it really is a good reminder for those of you guys who have maybe seen it before, or for those of you guys who are new to the space, a good indication of where Ripple sees XRP price going. So they are planning for XRP to take on a larger market cap. And basically, if the supply is a finite supply, 100 billion, and as we all know, XRP does get burnt from the ecosystem. For that market cap to go up to target those high value payments, XRP price needs to go up because market cap is price times supply. Another clip that I just wanted to show you guys was posted by the digital asset investor in May. His thoughts, and it sounds quite probable, is that this Ripple lawsuit is just about the power play. This is a clip with Gary Gensler interviewing Tim Draper about cryptocurrencies back in 2018. Okay, this was a blockchain summit back in 2018, way before Gary Gensler was chairman at the SEC. Listen to this.
You mentioned Jamie Dimon, so let's bring it back to Jamie and JP Morgan. What do you think is going to be the thing that they will have to change the most or lose market share and somebody else is going to do better, faster, serve their clients better than JP Morgan or Goldman Sachs?
You can just hear the bankers panicking right now.
But what
just
what
feel
line,
the panic in their voices.
What's the line
but here's
of business that is most
well. Here's what always happens. The first thing that happens is they try to go, oh, it's nothing, and they did that. I mean, that's with every new industry, every new technology comes along. The powers that be, the incumbents, the status quo, all say it's nothing. Don't ignore the man behind the curtain. This is nothing. And then all of a sudden, it's too big to get in there. They're going, oh my God, I got to face this thing. And then they all line up and they wrap their arms together and they say, we're not letting this happen. And then it keeps going. And then they say, okay, well, let's sue them. Or let's go get the government.
There's another thing they do. They adopt the technology. I think.
No, that's at the end.
They will adopt this technology.
No, this is the last thing they do. No,
Yeah, it's like
it's
the
after.
seven
It's
stages
after.
of grief, I
Right.
know.
It's after the press planting. They plant the press stories. They put out lawsuits. They create as much of a fuss as possible. They try to get their government friends involved. And then they go, oh, God, this thing's happening.
Plant the press stories. They sue companies. Is Tim Draper right on the money here? And he's saying all this to Gary Gensler. Let me remind you, this was back in 2018, before Gary Gensler was the chair at the SEC. Digital Asset Investor says in this tweet, no matter what anyone says, Gensler is the top dog. He can make this go away yesterday. Nothing happens without Goldman Sachs and JP Morgan. So the banks quickly losing their power against what is coming down the pipe. And it sounds to me like Tim Draper is describing exactly what a lot of us have known since 2018. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.